Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll look at what happens in situations where a taxpayer is engaged in nonprofit residential rental activity. The IRS considers an owner to be making a profit if the rental income is more than the rental expenses for at least 3 years out of a period of 5 years. If a taxpayer does not rent for a profit, only the amounts up to the rental expenses are deductible. The taxpayer cannot deduct a loss or roll over any rental expenses that are more than the rental income to the next year. Taxpayers in such a situation should report not-for-profit rental income on Form 1040 or 1040 NR, line 21.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.